We begin with that breaking news on Wall Street today. The major markets lost significant ground today over worries of a possible recession.
At the closing bell, the Dow had dropped 800 points. The S&P shed 85. The Nasdaq lost 242 points. Financial experts are putting the blame on the bond market while President Trump took aim at the Fed.
Investors took another wild ride today with markets being jolted. This time it was the Treasury sending a shudder through the street with fears of the R word.
The bond market shows a significant inversion, meaning that the short-term rates are higher than the long-term rates, which is often considered a sign or a leading indicator of a recession. So that causes a lot of the anxiety.
But President Trump once again took aim in multiple tweets at one of his favorite targets, the Federal Reserve Chairman and the Fed's management of interest rates, writing, "Our problem is with the Fed, raised rate too much and too fast, now too slow to cut." He called the Fed Chairman Jerome Powell clueless and says he's made enormous mistakes. Yesterday, the president signaled he was backpedaling in the trade war with China when he delayed new tariffs, triggering a one-day uptick in stocks.
We had a very good talk yesterday with China, a very, very productive call. I think they want to do something.
Poor Chinese and German economic data have fanned the flames of a feared global slowdown, but Gad Levinan of the Conference Board says while it's a bumpy time for investors, there are positive economic signals in the U.S.
I think some of the fears are overestimated. I think the drop that we have in the stock market is not a good indicator of the U.S. economy at the moment. The U.S. economy is looking better than the stock market is looking.
Now, among the big losers today, retail stocks such as Macy's posted lower quarterly results. Tech stocks also fell.